Hello, friends. Here we go. Welcome to another episode of the Block Thrasher Daily Crypto Update. It is Thursday, April 29th, 7:28 a.m., and we have a ton of really great stuff to talk about today. There's going to be some good news and some really great information. The market, the altcoin market, is just hot. Bunch of the altcoins are pumping big time. It is super cool. It is exciting to see. Let's just jump right in and start with the word of the day, which is refractory. Refractory. R-E-F-R-A-C-T-O-R-Y. What does refractory mean? It means hard or impossible to manage, stubbornly disobedient. We've all known children who are like that, right? Who are refractory, just stubbornly disobedient, maybe even defiant at times. That's what refractory means. It is hard or impossible to manage. If you've ever been an administrator of a group, a crypto group on Facebook or maybe on Discord or one of these others, it can also be a refractory place because it can be hard or impossible to manage. People will come in and they'll just start to get a little bit at times nasty with each other. It's the times we live in. It's funny, thought about this a bit. People will say things to each other on social media that they would never say, or treat people in ways that they would never treat people in real life. So a little bit sad, but anyway, good word of the day, refractory, R-E-F-R-A-C-T-O-R-Y. Okay, let's jump in and take a look at the market and see what is happening. Interestingly, the market cap, the total market cap, is only up 0.4%, even though we're seeing some significant gains in the alts. This in part due to the fact that Bitcoin is stagnant currently. This also has resulted in a situation in which Bitcoin dominance has fallen even further. It is now at 46.6. It continues to drop and reach, I'd have to pull the chart up, but this is definitely a low, not an all-time low for Bitcoin, but we're getting closer and closer as Ethereum continues to rise in its position in terms of dominance. It is now 14.8% of the entire cryptocurrency total market capitalization. And we have a story today which talks about why that just might be the case. Ethereum gas prices have been relatively low of late at this moment, according to CoinGecko, which is, I'm sure, pulling the data from Etherscan. Standard is 92, but it was just down at 50 something earlier this morning. Obviously, people are waking up across the country here in the US and starting to do some trades, and so that price is rising just a little bit, which also points out something. If you can time the markets right, or versus the east and the west, and just get just the right time to pull some of those Ethereum trades, you might be able to save on some of those transaction fees. So let's jump into prices real quickly and take a look. As I said, Bitcoin is down 0.4% on the week, dropping in the last 24 hours, down 1.6%. Bitcoin is currently trading at $53,979.11. It's just been stuck. It has not been able to move. If you look at the chart, it's going sideways and has been this entire week. Ethereum, however, is at a new all-time high, up 16.8% on the week, up 3.1% in the last 24. Ethereum is now $2,774.87, which is incredible. Just incredible to see. Binance Coin also continuing to hit new all-time highs, up 9.4% on the week, up 7.6% in the last 24. It is now trading at over $600, $601.59. Just mind-blowing. When not too long ago, Binance Coin could be picked up for $25 or $30. XRP is also up 6.8% on the week. It is now trading at $1.39. Cardano saw a nice boost. Cardano getting closer to its all-time highs, up 13.5% on the week, up 7.2 on the day. It is currently trading at $1.37. Dogecoin has not moved this week, just sitting steady basically at 30 cents. Polkadot, same thing there. Not much movement, $33.91. Uniswap riding on the coattails of Ethereum, one would imagine, but even outperforming it on the week, currently up 25.2% to $41.91. You've got to imagine that there's a bunch of people out there who got Uniswap in the initial airdrop, sold it thinking, it's never going to go over $6 or $7, who are now very despondent, thinking about, oh man, running the math and going, if I have held on to that original 400 Uniswap that I received, or maybe in some cases even double or triple that if they had more than one Ethereum address that had interacted with the Uniswap exchange, they're looking at that going like, that's now $16,000. Ow, can't believe. Actually, currently it would be closer to $17,000. Yeah, that would hurt. By the way, a number of people have asked in the Facebook group about airdrops and would like an explanation of that. So I will do that at the end of today's episode. We've got a bunch of great things to talk about. We were going to be talking about how the Nigerians are increasing their crypto trading in spite of the ban over there. We're going to talk about how Cardano has secured a contract that is going to bring Cardano into Africa. It's a huge thing. We've got some information about Algorand and the P network, which does these. It's a bridge, and I'm going to explain all of that to you guys because it's pretty phenomenal stuff, and I want you to understand that. We're going to talk about how institutional investors are moving into alts, not away from Bitcoin, but just moving into alts, which is another great thing, I believe, for the cryptocurrency space, not so much for maximalist of Bitcoin. But then we're going to also talk about our cryptocurrency terminology as we do each day until we get through that. And then I will talk about airdrops right at the end. But rounding up the market, Litecoin is at $258, up 1.8% on in the last 24. The rest of these just don't have much movement on the week at all, or even the last 24 hours. So I will not. So I'll just blow through the prices. Chainlink, $36.83. VeChain, 19. Actually, VeChain is taking a hit, down 16.4% in the last 7 days. VeChain, it's interesting because VeChain is being used by one of the European countries to track COVID vaccinations. Now, from an investment standpoint, if VeChain ends up being used for such a thing and you have a whole bunch of European countries or just countries in general mandating that people have to use that service, from an investment standpoint, that could be good. Now, however, for me, I'm not going to touch VeChain on principle because I don't like the idea of such a tracking system. It's way too Orwellian for me. I'm opposed to mandatory vaccinations in general, but especially because I believe in the concept as a libertarian in personal property rights, and the primary number one thing that you own as an individual is your own body. And so just on that principle alone, no one should be telling you what you can or can't do with or put into or have to put into your body. Stay away from our bodies, people. That's ours. If you the only justification for someone demanding that you do anything with your body or put anything into your body is if you do not own your body and they own your body and you are a slave or property of the said government. If any other person were to come, an individual were to come and demand that you do such a thing, people would think you're crazy and insane, and that is an abusive force of power, right? And it is. And so on those grounds, I'm totally opposed to it. And VeChain is working to do that and trying to create that digital passport on blockchain or what have you. And here they are down 16.4%. I don't know if there's any connection at all. There may not be. Solana, on the other hand, is still up 35% on the week. However, it is currently down 4% in the last 24. It is trading at 43 cents. Theta Network just kind of holding steady at $11. Filecoin, same thing, $150.62. PancakeSwap saw this nice pump over the last week, up 60% and up 19.3 in the last 24 hours. It is currently $42.69. Polygon's Matic has just been killing it as well. So that deserves a mention, up 152% on the week, 24.7 in the last 24 hours. I do not have a reason as to why it's pumping such other than the fact that people could be utilizing it instead of Ethereum, running transactions on that side chain or shard. Maybe we'll see something that might explain a little bit. I just haven't jumped into looking at what's going on there. Algorand is number 41 in terms of market cap, but I put Algorand right next to Solana. It is up currently 11.1% on the week, up 6.8% in the last 24 hours. And we have some good news for Algorand today that we'll talk about. This would be Algorand is in my top 10. Super, super, super solid project. Phenomenal team, phenomenal founder, great technology, tons of companies. I think there's or projects, I should say, 70 partnerships ongoing right now. And that number continues to increase that are using that platform. Avalanche is another that is now, that is competitive and up 11.3% on the week, up 5.3 in the last 24 hours. Avalanche is currently trading at 28.70.71. I like Solana and Algorand better because they are easier to stake with, and I think their technology and teams are just a little bit better. Definitely a couple of coins to keep an eye on. Of course, if you've been following the Block Thrasher daily crypto updates for long, you know that already, how I feel about that. All right, let's move on to the news. We're going to start with the first story, which is this, that Nigeria hits 1.5 billion in peer-to-peer trading volume despite the crypto trading ban. Nigeria continues to just be all over the place. They flip-flop back and forth. It's just like India. They ban it. No, they didn't ban it. They banned it. Oh, well, there's this, and that's what's happened here. Nigeria is arguably the largest cryptocurrency market in Africa, with millions of the country's young citizens trying to leverage their power to solve their financial problems. However, the recent ban placed on banks by the country's central bank with what is also known as the CBN prevents them from servicing crypto entities. This had threatened to reduce the size of the market. But no. Instead, what happened? For clarity, the central bank said it's okay with cryptocurrencies and it's not discouraging people from trading them. The prohibition is only applicable to banks and financial institutions. So their strategy was, sure, trade them all you want, but you aren't going to be able to go to a financial institution or a bank and trade that for our fiat. I imagine the thought process behind that was, number one, to not threaten the fiat. They don't want everyone in Nigeria to just stop using their central bank currency altogether and move to crypto. And number two is they thought this would just be a way to put their thumb on the cryptocurrency market and slow its adoption there by trying to make it nearly impossible to withdraw into fiat But it's interesting because the exact opposite has happened. And what it's also done is instead of protecting the people of Nigeria, it's done the opposite because now they're just using less safe means of converting to fiat. But also at the same time, it's not a bad thing because they're all learning to do things P2P and just cut the banks right out of the entire process, which is sort of the whole point of crypto anyways, to be unbanked. Moving on with the story here. In other words, crypto exchanges and related companies that previously allowed users to deposit or withdraw their funds directly from their bank accounts can no longer do so. The ban became a major setback as bank transfers via exchanges made it easier for many Nigerians to access crypto services without getting scammed. But the hurdle did not deter Nigerians from trading crypto assets, according to a recent report. Nigeria has emerged as the biggest peer-to-peer market for Paxful amid the prohibition. So it's not a deterrent. When the ban went into effect, cryptocurrency traders in Nigeria had to devise a means to continue their transactions without the interference of banks via crypto exchanges. P2P trading became the order of the day, and Paxful, a global peer-to-peer cryptocurrency trading platform, became one of the most used platforms in the country. As per the report, Nigerians conducting trades using the Paxful platform were able to hit a remarkable trading volume of 1.5 billion worth, with over 1.5 million users despite the ban. And according to data published by Useful Tulips, Nigerians using Paxful traded over 6.3 million in the last 7 days and over 77.4 million in the last 90 days. Apart from Nigeria, several other major economies are becoming more interested in crypto trading. Paxful saw impressive trade volumes from countries like China, the United States, India, and Kenya. Globally, the peer-to-peer platform has over 6 million users with more than 5 billion trades that have been conducted. According to the company's CEO and co-founder, Ray Youssef, the traditional financial system can no longer meet up the needs of a large percent of the world's population. He noted that the financial systems that are currently in place foster a lot of financial inequalities, adding that cryptocurrencies have the power to change the system. He said, with cryptocurrencies, we see an alternative, a way to rest the financial system based on equality. Our mission at Paxful is to give everyone equal access to finance, no matter who they are or where they are, so they can control their own money and build the future they want with financial freedom. Good stuff. With millions of people venturing into the crypto space in search of alternative stores of value, adoption levels have increased, but this is just the beginning. So Paxful, the peer-to-peer trading platform, global peer-to-peer trading platform, just seeing explosive growth. Bisq is another peer-to-peer trading platform, which is also seeing similar growth. You could check that out if you like as well. So this is good to see. Good to see. All right. So we see today when we looked at the market that Bitcoin is just in stuck mode while the alts are pumping some 10, 15, 20, 25, all the way up to 60%. So here might be a reason why. After Bitcoin, institutions are now finally turning to Ethereum, according to cryptobriefing.com. While many retail investors have been shaken out of the market due to the high volatility, institutional demand for Ethereum is rising. Ethereum's scalability issues have drawn many investors and developers away over the past few years. That's just opinion and speculation. I mean, I wouldn't argue against it, but however, the London hard fork, slated for July, seems to be attracting a lot of attention. Alongside the ultrasound money, quote, ultrasound money meme, institutional demand for Ethereum also appears to be picking up. Ever since the CME launched its Ether futures on February 8th, Open interest and daily volumes have been rising steadily. Data from Skew shows that the total number of outstanding contracts on the world's largest financial derivatives exchange sits at 357 million, while trading volume surged to 680 million on April 22nd. It's almost doubling. According to Arcane Research, the spike in institutional demand is related to the London hard fork and a new Ethereum-based financial product launched in Canada. Of these two, I think that the Ethereum-based financial products launched in Canada are more of an impact. Whether the London hard fork is or not, I guess that would be buying the news. But if I were these institutional investors, I'd want to see it happen first. Especially with the history of Ethereum development and the time that these things actually end up taking. They often take so much longer than what is stated. The growing open interest and trading volume corresponded with the approval of 4 Canadian Ether ETFs last week as Purpose Investments, CI Global Asset Management, Evolve, 3IQ, all launched their ETFs. Yeah, that to me makes a lot more sense. Also, Ethereum whales are on a buying spree. On-chain data shows a similar increase in demand for Ethereum among larger holders. Ether supply distribution chart shows that the number of addresses with 10,000 to 1 million ETH surged by 5.22% over the past 2 weeks. Roughly 57 whales have joined the network since then. This just makes me think that all of you retail investors, all of us, we need to hold onto our crypto when the market tanks. Sadly, what's happening is so many of the retail investors and the Johnny-come-latelys, the people that have shown up, they just go in and they panic dump and they want to get into these meme coins and make a quick buck. And so what's happening is during these market downturns, that's when the institutionals come in and they just buy. And this is negatively affecting the distribution of some of these cryptos like Ethereum. It's not really a great thing that addresses with smaller amounts continue to shrink and addresses with 10,000 to 1 million surge, because that negatively affects the distribution. And then that's going to just put the Ethereum wealth, into the hands of fewer and fewer or bigger institutions. The growing number of large investors backing Ethereum may seem insignificant at first glance. However, when considering these whales hold between 27 million and 2.7 billion in ETH, the sudden spike in buying orders is substantial. The rising buying pressure behind Ethereum has been significant enough to drive prices to a new all-time high of 2,740, bringing its correlation with Bitcoin to a multi-year low of negative 0.18. And we're actually higher than that price right now, aren't we? 2,740. We're sitting at 2,769. So we're up a bit from the time of this writing. As long as Ether continues climbing while BTC tumbles, there is a high probability that more institutions will turn to this altcoin and help put prices even higher. Now, see, here's the thing. The institutions are always slower to move than everyone else. They move, they're big whales, right? So they can, it's also true we speak of whales in regard to the amount of money that they hold and their ability even at times to affect markets because of their massive purchasing power. But a whale moves really slowly too, don't they? However, we as smaller investors are able to move quickly, to be agile, and to understand the markets better if we do the research and the analysis. So what am I trying to say here? What I'm saying is institutions, they woke up to Bitcoin and they decided to go in. And so they've gone in. Now they're seeing the increase in the gains and they're learning more about crypto and they're saying, wow, Ethereum has this NFT thing going on and this DeFi thing going on and all of these projects and we're going to jump on board with Ethereum. Well, what's the next step? The next step is they go, oh, wow, there are these competitors to Ethereum that are actually bringing better technology. Cardano, Polkadot, you know the projects, Solana, Algorand, Avalanche, Elrond Gold, Tron, the list goes on and on. So, what happens? What's going to happen? After Bitcoin, they turn to Ethereum. After Ethereum, they will turn to more of the altcoins. What does this mean? This means that if all of that holds true, and that's an if, but if all of that holds true, we will continue, in my view, to see an alt season surge. And we've seen this with Grayscale as they started with a Bitcoin trust and then an Ethereum trust, and then they moved on to the other altcoins, and we've seen story after story. I think we read one just yesterday about them moving into new altcoins that they previously hadn't been in, and we're going to continue to see this. And as these alts open up to institutional investors, and they do just as they have done with the traditional stock, this is one of the reasons why, to me, the people that fantasize about Bitcoin becoming like the global dominant world reserve currency and who are maximalist with Bitcoin, there's so much out there. Like the fact that there are exchanges like Binance with so much trading going on with all the different alts means that that's not going to happen. Besides, the governments of the world aren't going to just suddenly, and the central banks they're going to fight that to the death. What I think they'd be more likely to hold a basket of cryptos, but there's a whole nother discussion for another day. I mean, could it happen? It could, but why Bitcoin? What does Bitcoin have? Technologically speaking, all it has is network effect. That's it. Someone might also argue, well, it's harder to change Bitcoin, and that's a feature. Okay. It can be a feature. It can be a negative feature. It can be a positive feature. Depends on your outlook. Maybe something with a better governance model is a better feature. It remains to be seen. It remains to be seen if Bitcoin's even going to hold its dominance. I don't know. I tend to think it won't. But that's an argument that a lot of people have. And that is also part of what makes it fun to continue to watch what happens in this space. It's exciting. Moving on to the next story of the day. Cardano to roll out blockchain-based IDs to millions of students in Africa. This is good news for Cardano. This is good news for cryptocurrency. This is a real-world use case overseas. The blockchain firm and Cardano developer Input Output Hong Kong is announcing a partnership with the Ethiopian government aimed at digitizing the country's education sector. In a blog post, IOHK's director of African operations, John O'Connor, says that the blockchain firm will deploy its decentralized identity solution, Atala Prism, to thousands of schools in Africa's second most populous country. This will provide all students with blockchain-verified digital qualifications to reduce fraudulent university and job applications and increase social mobility by allowing employers to verify all applicants' grades without a third-party agency. All right. We looked at that a little bit yesterday as well. So I'm not going to continue on with that here. Moving on. Binance and Huobi stablecoins surge as Asia seeks fiat alternatives. Why? Why this surge? Asian stablecoins, Binance USD and Huobi's HUSD beat out stablecoin giants Tether USDT and Circle USDC in average transaction size for Q1, according to a recent report from CoinDesk Research. Binance BUSD and Huobi's USD ranked first and fourth, respectively, outshining their seniors and leaving some onlookers scratching their heads. Is demand for alternatives to legacy finance on the rise in Asia? Asian stablecoin transactions are on the rise. Stablecoins allow for borderless transfers of tokens representing fiat currencies and are behind much of the liquidity in crypto markets, according to the CoinDesk report published this month. This is thanks to their ability to circumvent cumbersome traditional transfer process and the need for fiat on-ramps in exchange trading. Data compiled from blockchain research group Coinmetrics showed the top 6 stablecoins by average transaction size to be Binance, Multicollateral DAI, Gemini Dollar, Huobi, Circle, and Tether. Although Tether USD is the longest standing stablecoin, it does not command the highest average transaction size, the report said. This goes to the stablecoins of crypto exchanges Binance USD and Huobi USD, both of whose transaction sizes grew notably over Q4. Both Binance and Huobi stablecoins have deep roots in Asia and are younger than veteran Tether, which launched in 2014. Originally founded in China before departing for less regulatory constrained shores, the Binance cryptocurrency exchange, now the largest in the world by trade volume, launched its USD-backed stablecoin in September 2019. Binance Exchange sits on the largest daily volume of any major exchange, with a daily volume of almost 37 US billion at press time. Like Binance, Huobi's cryptocurrency exchange was also founded in China and moved operations to escape a government ban on crypto trading. The company, which now has offices throughout Asia and in the US, launched its stablecoin, HUSD, in July of 2019. Huobi's exchange ranks 4th by 24-hour volume at time of publication. Coinbase Pro and Kraken are 2nd and 3rd, respectively. But feelings are mixed. Despite the enormous appetite for stablecoins in Asia, the governments are not equally enthused. Recently, a newly launched Terra, THT, that was Thai bot-backed, rocked the boat in Thailand a bit too much, and Thailand's central bank declared the stablecoin to be illegal. Further southeast, Indonesian markets are focusing on Binance Launchpad's recently announced support for Toko Crypto, a project seeking to build an NFT marketplace for the country and bridge centralized and decentralized finance. According to the Toko Crypto CEO Peng Su-ka, TKO is Indonesian people's token. Such egalitarian ideals are nothing new for the world of blockchain, but buzz phrases like banking the unbanked and financial inclusion don't easily translate to ground level action when it comes to massive centralized institutions. So I'm not going to continue on with this, but it's just interesting in the sense that we're seeing this upsurge of stable tokens that are launched by these exchanges, and especially these exchanges that are based in Asia. And once again, this just brings to my mind what other exchanges out there might move in similar direction and see similar surges. And KuCoin, as I've been mentioning, would be one that's on my list. If you're looking for something that's a little less known, has potential to surge similarly, KuCoin that is in Asia, that will give you exposure to this rapidly growing Asian market, KuCoin might be a good one. All right, moving on to our story about Algorand. Algorand partners with P Network to build cross-chain bridges. After receiving a grant from the Algorand Foundation, P Network and Algorand have consolidated their partnership. This cooperation will build cross-chain bridge powered by P Network to connect Algorand to external networks and increase assets and token liquidity in its ecosystem. So what is P Network? P Network is a system composed of multiple validators to achieve cross-chain composability. It will allow assets to be interoperable with Algorand, a pure proof-of-stake blockchain. This network is natively complex to be connected with the other protocols. The cooperation is set to tackle the issue and expand Algorand's ecosystem. The cooperation will enable Algorand to support some of the most relevant tokens and cryptocurrencies in the industry, such as Bitcoin, Ethereum, Binance Smart Chain, BNB, Litecoin, EOS, Polygon, and many others. These cryptocurrencies are already cross-chain connected with P Network. The system has one of the highest numbers of bridges in the crypto space. Okay, so let's talk about bridges. What are these bridges? And as we do that, let's move into P network. I'm going to explain P network to you. So P network is one of the, I was just stated, one of the most widely used bridges. Right now, P network's token, PNT, currently trades at $1.88. It's up 8.30%. It is an Ethereum token that runs on the Ethereum network, and it is down quite a bit currently from its all-time high. It has a circulating supply of 28 million and a total supply of 74 million. It's just a governance token for the P network. I just wanted to make you aware of it, but it really isn't relevant to the issue that I want to talk about of what is happening here with Algorand, and which has already happened with the other platforms. So let me try to explain this to you as simply as I possibly can. Explain just how this works. So let's say that you hold Ethereum and you are tired of the transaction fees and the lack of speed and performance, and you decide that you want to trade Ethereum on a DeFi project someplace, but you don't want to do it on the Ethereum blockchain because you're getting eaten up by fees. So you want to take it to the Algorand chain because Algorand is fast and the transaction fees are low. How do you do that? Well, you can do that with a bridge. P network is a bridge. So here's what happens is you take your Ethereum and you interact with it with your P network wallet, and you say, I want to transfer this Ethereum to the P network or to the Algorand network. I want to transfer it to the Algorand network. So what happens behind the scenes in this trusted execution environment is that the P network interacts with the Ethereum blockchain through a smart contract, and it locks up, right? It burns that Ethereum token essentially. Not burns it, because burning it would be destroying it. But through the smart contract, it locks up your Ethereum, right? And then it creates a P network token, which would be called PETH, PETH, in the equivalent amount. So 1-to-1, right? So now you've got this P network token, PETH, which you then can interact with on whatever chain you want that is working with on the P network, but with Algorand. Understand that there? Or you can just then take it directly to the Algorand. Now here's where it gets to be really cool is with this bridge, you can have PETH, you can have THETA, you could have whatever tokens are available, and there's a bunch of them that are available, PEOS, PBTC, right? Then once you have those, so those tokens get minted. Let's just go back to the illustration. You've got Bitcoin and you convert it to PBTC. The Bitcoin gets locked up through smart contract. You have the PBTC, it gets minted. At any time that you want to go back to the original Bitcoin, on-chain Bitcoin, you can do that. But here's a cool thing. You can trade the PBTC or PEOS or PETH. You can swap it. You can do all kinds of stuff on whichever chain you want. If you're doing it on the Algorand chain or you're doing it on whichever chain works with the P network, you can trade it. And then that person is able to go and convert it back if they want to the original underlying asset, the Bitcoin or the Ethereum or what have you. So it's just creating interoperability. It's creating a system, a method, a way. That's how bridges work that allow you to use whatever token you want, whatever crypto coin you want off chain on whatever chain you want, blockchain agnostic. So it's really it's a good thing. It's useful. It's a cool thing, and it allows for an easier way to just send your crypto from one network to the other network, one chain to another chain, and all that sort of thing. It opens up all kinds of possibilities. So this is something to keep an eye on, and I just bring it up because, like I said, Algorand is in my view, one of the top 10 cryptos in terms of the quality of the team and in terms of the quality of the of its technology and performance. The platforms that are being developed on it, definitely want to watch it. Probably should be a little bit higher in market cap, but it's just, in my view, a little unnoticed and therefore a little undervalued. They also have on this P network a liquidity pool system called steroids.finance. It says here, looking to mint P tokens such as PBTC, you can do it from the P tokens dApp. So they have a dApp, which is where all of this, which I just described, takes place, where you can mint your PBTC, right? So you go and you connect your wallet and you've got your Bitcoin and they mint it as PBTC, and then you can trade it. You can put it into a liquidity pool. You can do all the DeFi type stuff on there. And they've got APY here. They've got returns. If you want to lock up your PNT, you can do it on Uniswap pools. They've got curve pools. You can do it right on so they've got PLTs. So the PNTs getting a 64.9% APY, PLTC getting a 63.62% APY, PBTC 54.94%. So see this P Doge, Uniswap, you can do P Doge with ETH. Oh, that has a 0% APY though, so I'm not sure why you'd want to do that. So Steroids is a platform to host liquidity mining programs, automatically mine liquidity for DeFi, liquidity pools, and farm tokens when contributing. There's some cool stuff here. Check it out if you're interested. All right, moving on to, we're going to have two education segments. We're going to talk about stock to flow. This is a little bit long, but it's worth it, so hang tight. This is an article from Forbes, and then I'll make sure I talk about airdrops and just try to describe that simply for people. This here is about demystifying Bitcoin's remarkably accurate price prediction model, stock to flow. The top question on everyone's mind, according to this author at Forbes, is when it comes to Bitcoin, what will the price be in the next 2 to 5 years? Unfortunately, there's no universally accepted route to making such an assessment. Some investors, now here he jumps into two approaches, and this is one of the best explanations I've seen in a long time of how to try to evaluate stock. Two investment approaches. Some investors prefer a more fundamental approach, where they evaluate macro trends to identify future performance. Such variables could include the ongoing shift to electronic payments, as well as inflationary spending by central banks in response to the economic destruction brought by the pandemic. Fundamental analysts also go to great lengths to assess an asset's intrinsic value, meaning the properties that make it unique and valuable. A great deal of effort has been spent to define Bitcoin's intrinsic value, which is derived from a combination of its cap supply, network security, divisibility. Bitcoin can be broken down to 8 decimal points, and transportability, such as cross-border payments and these types of things. And that's true. Like when we try to talk about intrinsic value is an interesting thing because you have to define what you mean by it. It has a number of different uses, and it all depends on how people are talking about it. So people will argue that gold has intrinsic value because you can make jewelry out of it. Okay, but you can make jewelry out of almost anything, right? And then with Bitcoin, we'll argue that Bitcoin has intrinsic value because it has a cap supply. These things that the author just noted. It's very secure. It's hard to read. You can't just go out and create more Bitcoin. It's it's impossible. It hasn't been done. It has a long history now of over a decade, where if anyone had been able to create Bitcoin, aside from the actual mining process on the blockchain, they would have done it and haven't been able to, right? It's divisible down to 8 decimal points. So it can be widely distributed, and it's non-confiscatable in theory, and it's transportable, so it's got use case, right? Technological use case. And in our world today, we understand some people are having a hard time grasping that and making the transition, but we understand that there is value in digital things, right? So Facebook, for instance, is massively valuable because They're basically a giant, massive billboard. That's what Facebook is. They're like the world's largest billboard company, except it happens on the internet and it's digital. And there's nothing tangible there, nothing you can touch, but there's, is there intrinsic value there? Well, yeah, because it generates value because it's eyes, it's people seeing it, right? So there's value there. Same thing with Bitcoin. As more people use it, as more people adopt it, that's eyes, that's people, that's value. It's all based, at the end of the day, though, it's all sort of subjective because it's based on belief. I believe it has value. It's for this reason. You might buy a car for $1,000 and you might flip it and sell it for $5. It's because you found somebody else who believes, who has a desire for it, who sees a potential in it, who believes it. Their belief of what it's worth is different than the person that was selling it. Or the person that was selling it just didn't have the same need because they have too many cars, or they don't need a car anymore, or whatever it is. The person buying it has a different need. It has different, so they value it, right? It doesn't mean that nothing changed with the car, right? Anyway, but what he's talking about here is that sort of fundamental analysis approach, which is a large part of what I try to do here with the Block Thrasher. With Block Thrasher, just in general, whether it be the website, whether it be the podcast or whatever, the daily updates, we're getting after that. Other investors, continuing on here, especially hedge funds, take a more quantitative approach to investing. When using this route, they care less about the intrinsic value of an asset and instead execute a trading strategy based on opportunities identified through the technical reading of price charts. Because price movements represent pure demand, supply, and of course, investor sentiment and psychology. These investors use a variety of models and metrics to develop a strategy, and they often trade in and out of positions extremely quickly. Most rely on algorithms to automatically execute trades. So see, these hedge funds and these quantitative investors, they are traders. They're not investors, right? They're not buying and holding for the long term. For the investment, they have extremely sophisticated systems. Now, if we're talking in the traditional world with equities and stock market and stonks, you're never, as a small retail investor guy with limited resources, you're never going to be able to compete because of this high frequency trading that's happening with these guys moving in and out super fast, right? And that is starting to happen within the cryptocurrency world as the exchanges mature and as some of the institutional hedge fund types are able to bring the systems that they've used in the traditional world with their algorithmic trading and their bots, their high frequency trading to crypto. And you're never going to be able to compete with that as a trader, as a day trader or whatever. And it's hugely risky. And it's just, so this author argues it takes two. It takes a combination of two. And I actually agree with that. I believe that the best primary strategy is the fundamental analysis, which he talked about just sort of the macro picture in terms of where is crypto or Bitcoin going to go. And that's talking about things like inflation and, how will the pandemic affect? Will there be a shift to electronic payments? And, these other things that make crypto valuable, such as limited supply, network security, network effect, visibility, transportability, all the other things that draw people to crypto. On a more micro level with a particular crypto, we get into what does the team look like? What kind of funding do they have? What kind of marketing capabilities do they have? What is their technology like? What are the tokenomics like? Is it inflationary? Is it deflationary? All of these things that we can look at and analyze and research. And then we can jump into, okay, on top of that, what is sentiment like? What's happening on social media? What are people saying? Because you have clearly situations like with DOGE or SafeMoon or others, where there's this, and as I've always said, super risky, but there's always this potential possibility because, as I was stating earlier, value is subjective. So DOGE, for instance, may be crap in terms of team. It has no team, very little, an almost non-existent team. Now that could change, sure, okay. It has terrible tokenomics, super inflationary, highly inflationary, super large supply, terrible distribution, 40% of the tokens in the hands of a few people, on and on. You know, the fundamental analysis isn't any good, but because of the power of celebrities and because of the power of the internet and memes and, you know, people just not caring about all of that because they aren't aware, or they just don't care. They pile in, they throw a bunch of money at it. And so if you're just going for that quantitative trader type of mindset and you just want to pull some quick cash, you can do that there, right? But you're never gonna do. I mean, you're gonna. The problem with that strategy is you will make profits sometimes, and then sometimes you will lose big time over the course of time. Whereas if you're combining the two, and this is the argument here, if you're combining the two, you'll make good long-term investments and see much, much, much greater gains over time. Continuing on with this. That said, these approaches are not mutually exclusive, and many traders incorporate a combination of each in their strategies. Additionally, there are some technical models that require an element of fundamental analysis to make sense. An example is stock to flow, S2F for short, one of the most accurate price prediction models that we have seen in crypto to date. Before getting into the details of S2F, it is important to clear up one common misconception. Although it was popularized in crypto by the pseudonymous Plan B, who described himself to be as a Dutchman in his 40s with degrees in law and economics, who has spent the last 25 years in traditional finance, he did not create stock to flow. Instead, because of Bitcoin's intrinsic value as a deflationary asset, he applied the metric to create a price prediction model that ties the value of an asset to its current stock to flow ratio. The results have been very compelling. In fact, stock to flow has probably been the most accurate tool that we have for predicting Bitcoin's price. See for yourself. So for those who are just listening and not watching on video, there's a chart here which shows the stock to flow line in white, and it trends up nicely. And the Bitcoin price almost mirrors it, almost exactly. And what's interesting about it is the stock to flow chart shows a Bitcoin price in 2025 of just over $1 million. It shows price toward the end of 21, coming into 22, close to $100,000. And then it levels out through 2021, 22, 23. It isn't until about 2024 that the price takes off again and goes from 100,000 to $1 million. So here's how it works. Stock to flow is elegant in its simplicity. You simply divide the current supply, stock, of a commodity or asset by its annual production flow, right? Plan B debuted the Bitcoin S2F model in 2019. He included a chart that compared its value with that of other commodities and precious metals with varying degrees of scarcity. The third column in the chart above, SF, represents the number of years it would take based on current production levels to double the amount of existing supply of an asset. As you can see from the chart, it would take 62 years to pull the current amount of gold out of the ground, making the existing supply relatively scarce. It would take 22 years for silver. While metals that are used more commonly for industrial activities, such as palladium and platinum, have lower ratios, when this chart was first released, Bitcoin's S2F was 25. 17.5 million coins, 700,000 production per year. This put it above silver, but behind gold. Looking today, however, Bitcoin stock to flow is much higher. Its total stock has increased to 18.6 million units. And because we have a halving last May, the issuance schedule was reduced to 328,500 annually, giving it a stock to flow ratio of 56.6. How does this compare to gold and silver? According to the World Gold Council, there was 197,576 tons of above ground stock in 2019. And if we divide that by 3,000, we get a new stock to flow of 65.85. So gold's stock to flow has gone up. But Bitcoin, due to the halving, as well as the fact that gold production continues to increase due to technological advancement, is making up ground. In fact, one of the big reasons why Bitcoin advocates believe in stock to flow is due to the very fact that its production schedule is immune to such advancement. So, nobody's going to be mining more. It just doesn't work that way. With gold, you can adjust the stock to flow by miners increasing their mining activity. Or if there's a large discovery, that also would be if we have a meteor hit the earth or something and it's packed full of gold. Although that's not very likely. Blind spots. Despite the stock to flow accuracy so far, it is not beyond reproach. And when I interviewed Plan B for this story, even he made clear that we should be careful to not make the connection that Bitcoin's issuance schedule and relative scarcity are the only reasons for its rise in value. And I would absolutely 100% agree with that. Let's read on a little bit more before I comment on that, though. For instance, one of the stock to flow's big blind spots is demand. Yes, that's exactly what I would have said. One is demand, which directly relates to intrinsic value. There are thousands of Bitcoin copycats with the same issuance schedules, but none can match its demand. Very good point. And thus its value. Plan B told me that the reason is that there is no other asset besides Bitcoin that has a truly decentralized nature and a truly unforgivable scarcity in that respect. I disagree with that. Plan B is certainly a maximalist, and so he's going to make some kind of statement like that, but I don't think that's true at all. Of course, there's other assets that are as decentralized. There's actually assets that are more decentralized, arguably. Now, I'm not going to debate that in today's podcast, but I leave that to others to examine. But it can be argued, and it can be argued pretty effectively. The Cardano would be one example of being more decentralized. Now, somebody's going to want to argue that. All right, we'll argue it at some point. This is not the time or the moment. But here's the point. To summarize that paragraph and that statement, stock to flow is and has been historically probably the best analytic metric to determine future price of commodities and of Bitcoin. That being said, here's the caveat, and I talk about this often. Cryptocurrency is a nascent market. It's a new technology. It's young. It's a decade old. And that matters. That matters significantly. So it's different than gold or other hundreds or even, in gold's case, thousands of year old markets, right? Where we're not going to see this massive adoption or uptick in the use of gold. It's not like suddenly next year everybody's going to run out and want some gold jewelry or want to buy some gold. Now that said, there could be an increase in demand because people want to run into gold as a hedge against inflation in an inflationary environment. Sure. But that's happened repeatedly over and over again over the course of history, right? For hundreds of thousands. It's not like people are suddenly waking up tomorrow and getting introduced to gold and saying, oh yeah, I think I want some gold, or that's cool. That's really cool. With crypto, this is what's happening. People, even if it's through DOGE or whatever it's through, people who had never even heard of cryptocurrency before are suddenly talking to a friend, and that friend is like, yeah, man, I've been doing this DeFi thing and I've been getting these returns, and I was able to go get a loan even when my credit is crap because I bought some, Ethereum a couple of years back and it just exploded in price. And yeah, I went over to Celsius or one of whatever. There's so many of them, right? And BlockFi or what, And so you have this mass adoption where you have institutions. Institutions have been in gold and silver and whatever else in the traditional markets. You're not going to have an institution, suddenly tomorrow go like, oh yeah, I never heard about gold, right? Or not heard about. Obviously, they've all heard about Bitcoin now and cryptocurrency, but they're now just for the first time investing in these things and coming on board. So as as helpful as stock to flow is, always have to bear in mind the newness of this market and the fact that it can just get obliterated by massive adoption. And we're talking globally speaking too, right? So if anything, stock to flow might give us a base, like a low of what's going to happen with Bitcoin and with the Bitcoin price, because it's not likely that the Bitcoin user base is going to decrease significantly unless something significant happens, regulatory speaking or something like that. It's going to continue to grow. And so I would see the stock to flow as the minimum. So if we look at that, if we go back to that, that means that, $100,000 would be the minimum around 2022, end of 2021, 2022, into 23 and 24. However, it could just explode past that, because in this moment in time, the adoption rate is so significant, right? And in the past, historically speaking, it could be that it was the stock to flow driving it primarily, and that's why the chart is so accurate. And the actual price tracks so closely to the stock to flow prediction model. We will see. But even if it just is the low, or it is totally accurate, it speaks to a phenomenal increase in both Bitcoin and the cryptocurrency market as a whole. All right, before we jump into the crypto terminology, let me just talk about airdrops real quickly and explain airdrops. If you want to track airdrops, a good site that I use to stay informed is airdrops.io. But here's what an airdrop is. And this has happened throughout crypto's history with different projects at different time. It's happened even with Bitcoin. You could think of, even though the Bitcoin Cash fork was a hard fork, it was like an airdrop. So there are holder airdrops. Basically, what happens is if you hold 1,000 Bitcoin, another project will launch and they will say, we are going to airdrop our crypto, our coin, our token at some ratio. It could be a 1-to-1 ratio. Let's say 1-to-1 just for the sake of argument. So for the sake of argument, let's talk about Bitcoin Cash because it was a 1-to-1. So what happens is at the time of the hard fork, if you had 1,000 Bitcoin in a wallet with a Bitcoin address, when the Bitcoin Cash hard fork occurred, that same wallet address could access the same number of Bitcoin Cash tokens on the new Bitcoin Cash chain. So you had 1,000 Bitcoin in your original Bitcoin wallet, and now you have 1,000 Bitcoin Cash in your Bitcoin Cash wallet. And so with Ethereum, let's talk about with Ethereum, because this happened with all kinds of Ethereum projects, where a project is launching an Ethereum token and they want to distribute the token and they want to bring awareness to the token. So they just give an airdrop. Now, in this case, let's say you have 1,000 Ethereum, but they decide that they're going to give half a token to one instead, right? So they airdrop and you use your Ethereum address because that's how tokens on the Ethereum network work. And you go to the airdrop page and you plug in your Ethereum address and boom, you're given 500 of the new token, right? Let's talk about a real world example, probably the largest that I'm aware of, most valuable, one of the most valuable, maybe the most valuable, I'm not sure, airdrops was the Uniswap Airdrop. Now, this was not for Ethereum holders, but it was for anyone who had an Ethereum address that had interacted with the Uniswap swap exchange or who had put some crypto into a liquidity pool on Uniswap. So at a certain point in time, what typically will happen is the project, in this case, the Uniswap, they take a snapshot of the Ethereum blockchain. Or they take a snapshot, they take a snapshot of their own blockchain. In this case, it was the Ethereum blockchain to see who had interacted with the Uniswap smart contract. Meaning you went to Uniswap and you swapped one Ethereum token, an ERC20 token, for another, right? Maybe you swapped Ethereum for Bondly, or you swapped Ethereum for, you pick your Ethereum token of choice. If your address had interacted with the smart contract, the Uniswap smart contract, at that point in time, you were given an airdrop of 400 Uniswap. Just imagine, all you had to do was go into your MetaMask wallet or your Trust wallet or whatever wallet you use to interact with the Ethereum blockchain, add that token. So in Ethereum's case, Uniswap has a smart contract address, as every Ethereum smart contract does. You just add that token. Sometimes you can automatically add it, or you might have to put in the smart contract address, and boom, your Uniswap shows up. And so this is what happens with airdrops. EOS, on the EOS blockchain, the same thing happened. In many cases, with that, you didn't have to do anything. It was just boom. With Ethereum, the same thing happened. If you held Ethereum, if you held EOS, I imagine the same thing will happen with Cardano. The same thing definitely is going to happen with Solana and Elrond Gold, and all over the place. There's these airdrops. These are token holder airdrops, and they're the best kind, because they just are there for you. Typically, all you have to do is go to the project's website and put in your address, and boom, you can claim the airdrop. Those tokens, that's what you had to do with Uniswap. So if you were eligible because your address and your wallet's address, your Ethereum address had interacted with the Uniswap smart chain, you just went to their website, you put in your address, boom, 400 available Uniswap to claim. Click the claim button, you click it, and there it is. It's now deposited into your wallet, is the way you can think of it. And then you can sell it and you can trade it and do whatever it is that you want to do with it. So airdrops are a great thing. And I always try to keep everybody updated on upcoming airdrops the best that I can. I'll post it in the Facebook group or mention it on the podcast or on the website, blockthrasher.com. I'm going to create a page. I just thought of that. I need to create a page on blockthrasher.com with upcoming airdrops. All right, let's take a look at the crypto terminology. We're now in the J, K, and L. JOMO. What is JOMO? JOMO. It is the opposite state of FOMO and stands for joy of missing out. KYC. We talk about KYC frequently, so hopefully I know you understand what it means. It is know your customer, short for know your customer. These are checks that crypto exchanges and trading platforms must complete to verify the identity of their customers. What it actually is a way for the IRS to ensure that you pay your taxes. So KYC and AML go together. You're going to hear that all the time. KYC, AML. KYC, know your customer. AML, anti-money laundering. AML. This is something that never existed until around 9/11. And everybody freaked out about terrorism. And we went on this war on terrorism. And the Patriot Act was passed. And suddenly you started to see more and more invasive and intrusive regulation on, we want to know who you are, we want to know what you're spending, we want to know where you're, all of that. And it's just getting worse and worse and worse and worse. That's what this is about. It stops very little crime, it stops very little funding of terrorism, it's incredibly ineffective. The analysis data shows, but it's never going to go away. It's only going to get worse, right? To the point where now they're talking about warrantless, access to your bank account and all your banking transactions. I think as it stands now, if there's a transaction that's over $10,000, banks have to notify the IRS. Or if there's any suspicious activity, lots of cash being deposited, and on it goes. There's all these flags, right? So the banks are being forced to be law enforcement arms of the IRS, essentially. And this is just the direction that everything's heading in. Instead of taxation being voluntary, the desire is eventually to get to the point where every single digital transaction is recorded. This is the whole point behind CBDCs too, I believe, is, on the upside, people might think, well, this is a great thing because, shoot, you're not even going to have to file your taxes because they already have all the info. They're just going to say, here's your bill. Or they might just withdraw it. What you owe. In a way, that almost makes more sense. Like, just take it as we go. And then people will be less aware of the amount they're paying, which is sort of the whole point behind taxation being withdrawn from your paycheck, right? And the quarterly thing and everything. When it's taken out that way, then people get a refund at the end of the year. They think the government's benevolent. Oh, look at this. I'm getting money from the government. Like, no, you're actually just getting back money that they took in the first place that you earned. It's not like a bonus paycheck from the government or whatever. It's just returning to you what you own. Except you didn't have that money in the meantime to invest and earn interest or do whatever you wish to do with it. Anyway, moving on from that. Enough of a side trail with that. Lambo, slang for the type of car that many crypto enthusiasts aspire to buy when their digital assets, quote, moon or rise in value substantially. When Lambo. Lamborghini. Everybody knows what Lambo is. That one's kind of funny, I would think. Maybe not. Ledger, a record of financial transactions that cannot be changed, only appended with new transactions. That's what a ledger is. Leverage, money that a trader borrows from a brokerage, enabling them to gain far greater exposure to a position than what their capital allows. This is like gambling, and this could be something that could become an addiction that can just destroy and wipe people out. If you ever are going to mess with leverage, if you're going to borrow money from a brokerage or an exchange to get greater exposure, you better make sure the amount is small enough that it's something that you can stand to lose 100% of. However, you might win big. Lightning Network. What is Lightning Network? It is a second layer protocol that is designed to solve Bitcoin's scalability problem by allowing transactions to be processed more quickly. Yeah, so it's a side protocol, a second layer protocol. It runs alongside Bitcoin. And so what happens is all these transactions happen on the Lightning Network, and then at the end of the day or at some point in time, it gets settled on the Bitcoin network. However, a lot of the details of the individual transactions remain there on the Lightning Network and are never sent out to the Bitcoin network. But it allows for scalability because Bitcoin has scalability issues. Transactions are way, way, way too slow and the fees are too high. Similar with Ethereum. Actually, Ethereum's gotten worse though. So this solves that problem. And in the same way, they're doing the same thing with Ethereum with second layer protocols like Matic, which is just exploding and doing really well right now. Limit order, limit buy, and limit sell. These are tools that enable traders to automatically buy or sell cryptocurrencies on a trading platform when a certain price target is reached. I plan to do a video here soon. It'll just be like a screen capture video. I'll probably do it on KuCoin of how to use an exchange and how to set some of these order types. The limit order, the limit buy, and the limit sell. And just how to use just the basics of how to use an exchange, because I know there are people in our community who are new and are struggling with that and could use some help. So I'll do that soon. Liquidity. Liquidity is how easily a cryptocurrency can be bought and sold without impacting the overall market price. Liquidity pool. Liquidity pools are crypto assets that are kept to facilitate the trading of trading pairs on decentralized exchanges. So a liquidity pool is, to just explain that a little bit further, you have an asset and you want to earn a little bit of an interest. So you go and you deposit it into a liquidity pool. Let's say it's on Uniswap. And they give you an LP token, which you can then hold. And then when you want to pull your Ethereum out of that, you have to put two assets in. So let's use Bondly, which is a great NFT platform as an example. So you put equal amount of Ethereum and equal amount of Bondly into this liquidity pool, and you earn interest. You're earning Bondly and you're earning a little bit of Ethereum. That provides liquidity for the platform for Uniswap, and then somebody else wants to come and they want to purchase some Bondly or they want to purchase some Ethereum, and they can get it out of the liquidity pool from what you've provided. And then as others put in, when you pull yours out, yours comes out, and this sort of thing, right? And so this is what a liquidity pool is. And you'll see the LP tokens are for liquidity pool tokens, and they can be utilized in that way. Liquidity provider. Liquidity providers are decentralized exchange users who fund a liquidity pool with tokens they own. Liveness is a guarantee that a system will continue to provide data and that no centralized authority can shut down its services. Long. What is a long? A long is a situation where you buy a cryptocurrency with the expectation of selling it at a higher price for profit later. All right, friends, that covers our crypto terminology for the day. I hope you have a wonderful Thursday, April 29th. We're getting closer to the weekend here. Looking forward to that, I'm sure, as you all are. It's time for me to go see if I can't fix vehicle air conditioning issue. One of my rigs, the one that I intend to take on the trip to Texas, currently the air conditioning is not working, and I do not want to be in Texas at this time of the year with temperatures hitting 90 and above, with, it's going to be 90 to 100% humidity in that area of southern Texas, Houston area. It will be painful. So I have to get that fixed. I hope that goes well. I hope it's not extremely expensive. All right, friends. I look forward to being with you tomorrow. Please tune in. Remember, it's always a great day to earn and stack more crypto. Appreciate you all. Talk to you soon. Have a great day. Bye now.